Hey, Bree here today with a success story about debt consolidation. Sarah and Dan are a young couple we met who had owned their townhome since 2010. They had a young daughter and were thinking of moving in the next year or so because their home had gotten too small for their growing family. Sarah and Dan were overwhelmed with keeping track of all their separate payments, payment dates, minimum payments, and interest rates every month. They wanted advice on how to pay off their various loans and which loans should be paid off first, with their goal of moving to a bigger home being top of mind. We got digging into their situation and found that by consolidating all of their debt into a new mortgage, we could save Sarah and Dan a ton in interest payments and lower their overall monthly bills. Here's how it worked. Sarah and Dan's old mortgage had a little over $130,000 left owing on it, and their monthly payment was $1,000. They had a car loan for $26,000 that they paid $780 on every month, a personal loan for $15,000 where they paid $420, and $4,775 owing on their credit cards, and their monthly payments on those were $145 every month. Their total debt was $176,025, and the minimum monthly payment on that debt was $2,345. We rolled all of that into a new $180,000 mortgage with a payment of only $875 every month. Their debt level didn't change, but their monthly payments went down by $1,470 every month. They were able to use their additional cash from each month to help pay that debt down and save for their next down payment. 9 months later, Sarah and Dan were able to buy their dream home. That's what we call a debt consolidation success story.